3 years of preparation, every book read, every concept understood, the strategy back-tested perfectly, but somehow, 6 months into live trading, the account is smaller than it started. Intelligence promised an advantage. Instead, it became the heaviest anchor. Smart people struggle the most in trading, not because they lack knowledge, not because they can't understand complex concepts. They struggle because every advantage they've ever had suddenly works against them. The same traits that earned promotions, degrees, and recognition become the exact things that destroy trading accounts. If you've ever felt like your intelligence makes trading harder instead of easier, hit the like button right now, not for the algorithm, because it tells me you've lived this specific frustration. The pattern shows up everywhere. Engineers who can solve differential equations blow accounts on emotional decisions. Lawyers who argue complex cases freeze when a trade moves against them. Doctors who make life or death decisions panic over a 2% drawdown. Success in every other domain promised success here. Trading exposed that promise as a lie. Most smart people approach trading the same way they approached everything else that worked. Study harder, analyze deeper, find the edge through superior understanding. The logic makes perfect sense. It's also completely wrong. Trading doesn't reward the smartest person in the room. It rewards the most disciplined. And discipline has nothing to do with intelligence. Something my mentor told me during a particularly brutal stretch stuck with me forever. Your IQ got you here. Your emotional maturity keeps you here. Most smart people never develop the second part because the first part always worked before. That sentence explained years of confusion in one breath. The trap activates immediately. Smart people see patterns faster. They understand probability. They grasp risk management concepts on the first read. This creates a dangerous assumption. If understanding comes easily, execution should too. But execution lives in a completely different part of the brain. Understanding happens in logic centers. Execution happens in emotional centers. And emotional centers don't care about your degree. Let me give you a quick example. There was a trader named Daniel, software engineer, worked at a major tech company, built algorithmic trading models in his spare time, back-tested everything perfectly, started live trading with a funded account. First week, he made $840. Second week, $1,120. By week 3, he had given back everything, plus another $900. The strategy worked. His understanding was flawless. But when trades moved against him, his brain started calculating alternative scenarios. Each losing trade triggered analysis paralysis. He'd hold losers longer because he could construct logical reasons why they'd reverse. He'd exit winners early because he could calculate all the ways they might fail. Intelligence gave him infinite reasons to break his rules. The account bled slowly, then quickly. Smart people don't fail because they're stupid. They fail because they're too smart for their own discipline. Every rule becomes negotiable when you can logically justify breaking it. Every setback becomes a puzzle to solve instead of a lesson to accept. The mind that earns straight A's keeps searching for the hidden variable that makes trading finally click. That variable doesn't exist. Trading clicks when you stop searching and start accepting. Subscribe if you want real psychology, not motivational quotes. This channel focuses on what actually keeps traders in the game. No shortcuts, no hype, just the psychological truth that makes the difference. The intelligence trap has layers. First layer, overconfidence. Smart people got smart by being right more often than others. Trading doesn't care about being right. A trader can be right 40% of the time and still be massively profitable. But smart people hear 40% and think, I can do better than that. They optimize for win rate instead of risk management. They hold losers because giving up feels like admitting defeat. Intelligence created a feedback loop where being right matters more than being profitable. Second layer, complexity bias. Smart people trust complex solutions over simple ones. Simple feels remedial. Complex feels sophisticated. So they add indicators. They create multi-factor models. They build elaborate systems that require 17 conditions to align before entering a trade. Then they wonder why they never take trades, or why they take trades that don't meet all 17 conditions because waiting feels unproductive. Complexity becomes a shield against the discomfort of simplicity. Simple rules work, but simple rules feel beneath someone who understands advanced concepts. Third layer, analysis paralysis. Smart people gather information before making decisions. This works in most fields. In trading, it creates hesitation. By the time all information is gathered, the setup is gone, or worse, the smart trader enters late, chasing, trying to capture what they intellectually identified but emotionally couldn't execute. The need for certainty conflicts with the reality of probability. Trading requires making decisions with incomplete information. Smart people hate incomplete information. I spent 18 months stuck in this exact pattern. Every trade needed perfect confirmation. Every setup required checking multiple timeframes, volume profiles, correlation with other instruments. By the time I felt certain enough to enter, I'd missed the entry, so I'd wait for the next one. Same pattern, same hesitation, same missed opportunity. The frustration built slowly. How could someone who understands this so clearly struggle to execute it? The answer arrived quietly one afternoon after another missed trade. Understanding wasn't the problem. Trusting the process without needing to understand everything in real time was the problem. Intelligence wanted certainty. Trading offered probability. The gap between those two things killed more trades than bad strategy ever could. Comment your current risk-to-reward ratio below. I'm curious where most people actually are with this. No judgment, just data. There was a trader named Sarah, worked in finance, understood quantitative analysis better than most, started trading with a clear system, 1 to 2 risk-reward, simple entries, defined stops. For 3 months, she executed perfectly. Small account, steady growth. Then she had 1 losing week. 5 trades, all stopped out. Intellectually, she knew this was normal variance. Emotionally, something shifted. She started analyzing what went wrong. The analysis made sense. Market conditions had changed slightly. She adjusted her strategy. The adjustments were logical. They were also emotional decisions disguised as logical ones. Her win rate improved, but her average wins got smaller because she kept taking profit early to lock in gains. Her account stopped growing. The intelligence that helped her build the strategy sabotaged her ability to trust it. She kept fixing things that weren't broken because sitting still while losing felt intellectually lazy. The harder you try, the worse it gets. That's the cruel irony smart people face. Effort worked everywhere else. Effort brought results. In trading, effort without discipline is just activity. And activity destroys accounts faster than laziness. Smart people can't sit still. They need to be doing something. Analyzing, adjusting, optimizing. The concept of doing nothing while holding a trade feels wasteful. So they watch every tick. They calculate unrealized profit constantly. They create stories about what the market is doing and why. All of this is effort. None of it is helpful. Professional traders look bored because trading is boring when done correctly. Wait for setup, enter, manage, exit, repeat. No drama, no complexity, no intellectual stimulation. Smart people hate this. Boredom feels like underutilization of capability. So they make trading interesting. They trade more frequently. They look for complex setups. They add layers of analysis that create the feeling of working hard. The market doesn't reward working hard, it rewards following the process. Following a simple process feels intellectually unfulfilling. That feeling kills more smart traders than market moves. Here's what happens inside the mind of a struggling intelligent trader. Trade setup appears, intellectually identified perfectly, but there's a small detail that's not quite perfect. Maybe volume is slightly lower than ideal. Maybe the previous candle closed near the middle instead of the end. These details are real. They're also irrelevant 90% of the time. But the smart trader's brain flags them. Suddenly, certainty drops from 80% to 70%. That 10% gap feels significant. The trader waits. The trade moves without them. Now the analysis begins. Should have taken it. The details didn't matter. Next setup appears. This time the trader enters despite similar small details being present. The trade loses. Now the analysis intensifies. Should have waited. The details mattered after all. What's actually happening? The trader is optimizing for certainty in a probability game. Every outcome gets analyzed as if it proves something about the decision quality. It doesn't. Good decisions can have bad outcomes. Bad decisions can have good outcomes. Smart people struggle to accept this because they're trained to believe correct analysis produces correct results. Intelligence without discipline is just expensive education. That's the anchor truth most smart traders eventually learn. The education costs vary. For some, it's a few $1,000s. For others, it's years of spinning in the same patterns. The cost isn't the problem, the lesson is the problem. Smart people don't want to hear that their intelligence isn't enough. They definitely don't want to hear that their intelligence is actively hurting them. But that's exactly the lesson trading teaches. Let me tell you about a guy named Jordan, worked as a management consultant, top-tier firm. His entire career was built on identifying inefficiencies and optimizing systems. Started trading Forex. Approached it the same way he approached client projects. Identified inefficiencies in his execution. Built optimization frameworks. Created detailed performance metrics. His trading journal was a masterpiece of analytical rigor. His trading results were a masterpiece of mediocrity. 14 months of breaking even, the strategy worked. Other people using similar strategies were profitable, but Jordan kept optimizing. Each optimization made logical sense in isolation. Together, they created a system so rigid it couldn't adapt to normal market variation. He finally stopped trading for 3 weeks, came back, threw out all the optimizations, followed the basic strategy he started with. First month, up 6.2%. Not because the original strategy was better, because he stopped thinking and started executing. His intelligence had created sophistication where simplicity was required. What trading belief are you letting go of after hearing this? Comment below. I want to know what's clicking. The shift happens in stages. Stage 1. Denial. Smart people assume they just haven't found the right strategy yet. More research will solve it. Stage 2. Frustration. Multiple strategies attempted. All of them work sometimes. None of them work consistently. The common variable starts becoming obvious but gets ignored. Stage 3. Bargaining. Maybe it's the time frame. Maybe it's the instrument. Maybe it's the market conditions. Anything except the actual problem. Stage 4. Anger. Usually directed inward. How can someone this smart struggle with something this simple? Stage 5. Acceptance. Intelligence is not the advantage here. Discipline is the advantage. Emotional regulation is the advantage. The ability to follow a simple process repeatedly without getting bored is the advantage. Most smart traders quit before reaching stage 5. They return to fields where intelligence is rewarded in obvious ways. The ones who stay aren't necessarily smarter. They're just willing to become someone different. Trading demands a personality type that most smart people don't naturally possess. Patient, unemotional, comfortable with uncertainty, able to execute without needing to understand everything. These traits aren't developed through reading, they're developed through repetition in uncomfortable situations. Smart people avoid uncomfortable situations by finding solutions. Trading doesn't have a solution, it has a process. Following that process requires becoming someone who doesn't need solutions. The identity shift feels like regression at first. Smart people built their identity on intellectual capability. Trading asks them to quiet that capability, follow rules without analyzing them in real time, take trades that feel uncertain, sit through boredom without creating stimulation, accept losses without conducting post-mortems that justify the decision or condemn it. This feels like dumbing down. It's actually leveling up into a different kind of intelligence, emotional intelligence, behavioral intelligence. The intelligence that allows someone to do what they know they should do instead of what feels intellectually satisfying in the moment. There was a trader I knew named Alex, PhD in mathematics, taught at a university. Started trading after modeling market probabilities extensively. Everything he built worked theoretically. Practically, he couldn't pull the trigger. Every entry point triggered a cascade of probability calculations. What if this is the 20% scenario instead of the 80% scenario? What if the model is missing a variable? What if market conditions shifted in a way the historical data doesn't capture? These questions were valid. They were also destructive. After 2 years of simulated trading and 6 months of barely trading live, something shifted. He started treating trading like running an experiment, not trying to be right, trying to collect data on whether the system works when followed mechanically. That reframe changed everything. He stopped calculating probabilities in real time, stopped questioning every setup, started executing. First quarter following this approach, up 11%. Not because the system changed, because his relationship with uncertainty changed. Intelligence stopped being a barrier and started being a foundation to build discipline on. The painful truth. Smart people need to get dumber to get profitable. Not actually dumber, but they need to stop using intelligence as a crutch. Stop analyzing themselves out of trades. Stop optimizing systems that work. Stop adding complexity to feel productive. Trading rewards simple execution more than complex understanding. Smart people intellectually understand this sentence immediately. Behaviorally, they fight it for months or years. Here's the framework nobody talks about. Call it the intelligence trap cycle. High intelligence allows rapid pattern recognition. Pattern recognition creates overconfidence in analytical ability. Overconfidence leads to trusting analysis over process. Trusting analysis over process creates hesitation when analysis is uncertain. Hesitation causes missed trades. Missed trades create frustration. Frustration triggers more analysis to fix the hesitation. More analysis deepens the pattern recognition. The cycle reinforces itself. Breaking it requires doing the opposite of what feels natural. Stop analyzing. Start executing. Trust the process more than the analysis. For smart people, this feels backwards. It's actually the only way forward. Small losses teach more than big wins. That's another sentence smart people understand intellectually but resist behaviorally. Big wins feel validating. They confirm that the intelligence advantage is real. Small losses feel frustrating. They suggest something isn't optimized yet, so smart people celebrate big wins and dissect small losses. This creates a feedback loop where winning feels like proof of capability and losing feels like a puzzle to solve. Neither perspective is useful. Winning is the result of process plus probability. Losing is the result of process plus probability. The process is the only controllable variable. Smart people want to control probability. They can't. The attempt to do so creates the struggle. If you've ever held a losing trade longer than your rules allowed because you convinced yourself it would reverse, comment guilty below. This is where intelligence becomes dangerous. There's a specific moment many smart traders experience, the moment when they realize their biggest edge isn't their analytical ability. It's their ability to turn that analytical ability off during execution. The brain that helps build the strategy sabotages following it. Recognition of this creates an uncomfortable split. Part of the identity says, I'm smart, I should use my intelligence. Another part whispers, using your intelligence during execution is why you're struggling. Resolving this split requires humility. Smart people aren't great at humility. They're trained to trust their thinking. Trading asks them to trust their process more than their thinking. The process was built using thinking. Following it requires not thinking. This paradox breaks most smart traders before they figure it out. I remember sitting after a losing week, reviewing every trade. Each loss made sense in hindsight. Market did this, I should have done that. Each win also made sense in hindsight. Saw this signal, took this action. The reviews felt productive. They felt like learning. They were actually reinforcing a dangerous pattern. The pattern of believing every outcome teaches something specific. Most outcomes teach nothing. They're just probability expressing itself. The lesson took months to land. Journal the process, not the outcome. Did I follow my rules? Yes or no? That's the only question that matters. Outcomes are data points. Process adherence is the metric. Smart people want to extract lessons from everything. Most of the time, there's no lesson. There's just variance. Accepting variance without analysis feels intellectually lazy. It's actually intellectually mature. The harder you try, the worse it gets. That anchor phrase deserves repetition because it's the core trap. Effort feels like progress. In most domains, effort creates progress. In trading, effort without discipline is just noise. Smart people increase effort when results don't appear. They study more, analyze deeper, add complexity, trade more frequently to get more data. All of this activity creates the feeling of working towards something. The market doesn't care about effort. It responds to execution quality. Execution quality comes from emotional regulation, not analytical depth. Smart people resist this truth longer than average people. They've been rewarded for effort their entire lives. Trading changes the rules without warning. The adjustment period is brutal. What actually works? Radical simplicity, one strategy, one time frame, clear rules, mechanical execution, no optimization, no analysis during trading hours, no tweaking because something feels off. Smart people read this and think, too simple, I can do better. That thought is the problem. Better doesn't exist in trading the way it exists in other fields. There's only profitable and unprofitable. Profitable comes from doing boring things repeatedly. Unprofitable comes from trying to be clever. Intelligence makes people want to be clever. Markets punish clever. They reward boring. Boring trading is profitable trading. Smart people hate boring. They need intellectual stimulation. Trading can't provide it without destroying the account, so the choice becomes clear eventually. Stay smart and struggle, or get bored and profit. Most smart people choose to stay smart. They leave trading and return to fields where intelligence is properly rewarded. The ones who stay learn to separate their identity from their intelligence. They find intellectual stimulation outside of trading. They treat trading like brushing teeth, necessary, simple, unemotional, repeated daily without variation. There was a trader named Raymond, aerospace engineer, designed satellite systems, started trading equity indices. Brilliant guy, couldn't make consistent money for 2 years. Every conversation we had circled back to the same themes: adding filters, adjusting parameters, finding the perfect entry timing. I finally asked him one question that changed his trajectory. If you had to trade with a blindfold on, just following entry and exit signals mechanically, would you trust your system? He went quiet. The answer was no. Not because the system was bad, because he didn't trust anything he couldn't actively monitor and adjust. That lack of trust was the entire problem. He spent 3 months paper trading without looking at charts between signals, purely mechanical. The results matched his backtest almost perfectly. The conclusion was undeniable. His involvement was making things worse. He started live trading the same way. First quarter, profitable. Second quarter, more profitable. Not because he got smarter, because he got out of his own way. Intelligence stopped being the driver and started being the passenger. The identity shift trading demands from smart people is profound. It asks them to value restraint over action, silence over analysis, repetition over innovation. These values contradict everything that made them successful before. Restraint feels like missing opportunities. Silence feels like not working. Repetition feels like stagnation. Innovation feels necessary for growth. In trading, these instincts are poison. Growth comes from repetition. Opportunities come from restraint. Clarity comes from silence. Innovation creates inconsistency. Smart people intellectually accept these principles quickly. Behaviorally, they fight them for months. Let me ask you something and actually answer it in the comments if you're comfortable. How many times have you changed your trading strategy in the past year? Not tweaked, changed completely. If the number is higher than 2, intelligence might be working against you. Smart people see flaws in systems. They're trained to fix flaws. Trading systems don't need fixing every time they lose. They need following until the statistical edge expresses itself. Smart people can't wait for statistical edges to express themselves. They need faster feedback. The need for faster feedback creates strategy hopping. Strategy hopping guarantees failure. The cycle continues until someone gets tired enough to break it. Something my mentor said during a phase where I kept optimizing everything has never left me. You're not broken, you're just too smart to trust something simple. The market will keep humbling you until you learn that simple works. Or you'll quit. Most people quit. That conversation happened 4 years ago. The humbling continued for another year after that. Not because I didn't understand what he meant, because understanding isn't the same as integrating. Integration happens through repetition. Through doing the simple thing even when every instinct says there's a better way. Through staying bored when the mind screams for stimulation. Smart people delay integration longer than others because they keep thinking their way around it instead of through it. The final layer of the intelligence trap is the hardest to see. Smart people struggle with identity outside their intelligence. If trading doesn't reward intelligence in obvious ways, what does it reward? Who do they become if not the smart person who figures things out? This existential question lives underneath all the technical struggles. Trading demands becoming someone who executes without needing to feel smart. Someone who follows rules without needing to understand why in every specific instance. Someone who accepts uncertainty without resolving it. These demands feel like personality erasure. They're actually personality expansion. The intelligence doesn't go away, it just gets applied differently, building the system instead of managing every trade. Reviewing data instead of analyzing every outcome. Creating structure instead of reacting to chaos. This shift from active intelligence to systematic intelligence is the transformation most smart traders never make. Years into trading, the relationship with intelligence changes. It stops being the thing that should make trading easier. It becomes the thing that makes building good systems possible. The system does the trading. Intelligence does the system design. This separation feels like defeat initially. It's actually victory. Smart people who figure this out become exceptionally good traders. Not because they're smart, because they learned when to use intelligence and when to follow process. That distinction is worth more than any analytical edge. The market doesn't care about potential. It doesn't care about credentials. It doesn't care about how smart someone is. It cares about one thing. Can you follow your process when it's uncomfortable? Smart people have usually avoided discomfort through intelligence. Trading removes that option. Discomfort is mandatory. The question is whether intelligence becomes a tool for navigating discomfort or a barrier to accepting it. Most smart traders use intelligence as a barrier. They analyze discomfort instead of sitting with it. They try to think their way out instead of acting their way through. The ones who survive learn to sit with discomfort without trying to solve it. They learn that some things don't have solutions, only processes, and processes require patience more than intelligence. There's no shortcut through this. There's only the decision to keep showing up with humility instead of certainty. Most smart people quit because humility feels like failure. The ones who stay aren't smarter. They're just willing to admit that being smart isn't enough. That admission doesn't come easy. It comes after enough losses to make continuing hurt more than changing. For some people, that's 6 months. For others, it's 5 years. The timeline doesn't matter. The willingness to change does. Intelligence without discipline is just expensive education. The question is how much that education costs before the lesson lands.